In 2015, when gold was at its 5-year low, China bought 708 tons of gold in just 1 year, after which China has been continuously increasing its gold reserves. China's officially reported gold reserves are around approximately 2,290 to 2,306 tons as of late 2025. That's nearly 3 times what it held 2 decades ago. China's share of foreign exchange reserves in gold cites around 5 to 6% of its total reserves, and valued at roughly $369 billion after price appreciation. China's gold buying is not random or short-term. It's a quiet, long-term monetary strategy. To understand it, you have to look at how countries protect themselves in a world where money is political. Most of the world's trade runs through the US dollar. Countries hold dollars because oil is priced in dollars, global trade is settled in dollars, US Treasury bonds are considered safe. But this creates dependency. If a country holds too many dollar assets, the US has leverage over it through sanctions, freezing reserves, financial restrictions, as seen with Russia. China holds trillions in foreign exchange reserves. A large portion is in US Treasury bonds, dollar assets, foreign currencies. These carry risks. Inflation erodes bond value. Interest rate changes affect prices. Currency fluctuations reduce real value. Geopolitical shocks can disrupt markets. Gold is a unique asset for sovereign reserves because it's universally accepted. It doesn't carry counterparty risk, unlike bonds. Historically, it holds value during crisis periods. No country controls it. It cannot be frozen. It does not depend on any government's promise. It rises when currencies weaken or uncertainty increases. For a central bank, gold is like financial insurance. China has watched this very carefully. By increasing gold reserves, China is slowly reducing how exposed it is to US financial power. Foreign exchange reserves are meant to do one job: protect the country during shocks. If reserves are mostly in paper assets, they depend on other countries' stability, other governments' policies. Gold is a reserve of last resort. It doesn't rely on the US economy, the Eurozone, or global financial markets. In extreme scenarios, gold can be sold anywhere, accepted by anyone, used to stabilize currency confidence. China is building a reserve that can survive currency wars, debt crises, global recessions, political conflict. China is preparing for worst-case scenarios, not best-case ones. China, by building large gold reserves, signals that its foreign reserves aren't just paper assets, but include a hard, universally accepted asset. China wants the yuan to be used more in global trade. China and partners are using yuan directly for settlement with some major trade partners. See reports that 99% of Russia-China trade is now conducted in ruble/yuan. Yuan's global share is still small compared to the dollar, but measurably increasing in payments, trade settlement, and cross-border finance. For other countries to trust a currency, they ask, what backs it? Historically, trust in currencies was linked to gold reserves. By holding more gold, China strengthens the credibility of its monetary system and quietly supports the long-term ambition of the yuan becoming a more global settlement currency. Even if the yuan isn't officially gold-backed in a literal sense, gold holdings strengthen the overall perception of China's monetary resilience, making the yuan incrementally more trustworthy. The combination of visible gold backing and expanding yuan use builds credibility. China is converting part of its reserves from assets controlled by others to assets controlled by itself. Gold is the only major reserve asset that fits that description, and that's why the buying is steady, silent, and strategic. If you liked the information given in this video, then subscribe to the channel to watch more such informative and straight-to-the-point videos.